All right, guys, what's going on? Zarb here. I want to get into this trade recap that we took on the Nasdaq. So this was taken on Wednesday, so we're going to go through this in the replay mode, but I did take it live on ASFX TV. So we have a recording, and I'm going to go over the recording as well, where I kind of walk you through the setup in real time. And yeah, this was just a beautiful setup. We waited very patiently for our move. We wanted to see a bounce in the 11 a.m. session here on Wednesday, right? So this is the thing about streaming live. Taking these trades and calling them out can be a bit nerve-wracking at times, but this is what we do for our community. This is not a signal service by any means. We want you guys to learn and understand why and how we take these setups. But at the same time, people follow suit. They follow us into these trades, and when we catch a banger like this, we got to talk about it because, the whole team ate. We captured almost 600 ticks on the Nasdaq. And it took like maybe 25, 30 minutes for the price action to deliver RTP. So, just look at that. It was just nonstop 5-minute candles, and we managed to catch the low. And I got a recording of this, so you'll see proof of the execution. But the main components of this setup, we were using volume profile and we were using SMT divergence. Which is an ICT concept, and we're going to go into detail on all of this. So to start off, I want to get into the 15-minute time frame. And we took our trade on the Nasdaq, right? But we're going to have to look at the ES as well to recognize the SMT divergence. So if you see right here, Nasdaq put in a higher low right here, correct? We had this protected low from the overnight session, and Nasdaq could not break through this low. So put in a higher low. If we go to ES at the same time, that's right here. So this is that low from 3 a.m. ES took out that low. So this is an SMT divergence. This is the beginning foundation to recognizing a reversal. Now, what this is a divergence between the two main indexes. And the way to think about this is it's very similar to RSI divergence, right? If you're familiar with RSI divergence, you're looking at price action in the case of a bearish divergence moving higher, while the RSI divergence line is going lower. This is the same idea, but a much more effective and higher probability reversal signal than RSI divergence because it's immediate. When you see this type of price action pattern where the ES in this case makes a lower low, while the Nasdaq makes a higher high, it's an immediate reversal signal. Now, I'm not going to say they work 100% of the time, but they work very, very often. It's one of the most key reversal signals in my arsenal. So this was number one, okay? We had this very clear SMT divergence, so giving us the confluence to a potential reversal. On top of that, if we go to the 1 hour, while we are mostly in a range, at the end of the day, we have been grinding higher in this market, right? Just pushing higher, making a higher high right here. So this is our initial market structure shift. We put in a lower low, we put in a higher high, we put in a higher low, and now a higher high right here. Then what do? Put in a higher low, consolidate, and once again, put in a higher high. So what that's telling us as day traders is even though if we go to the higher time frame, we're very bearish, right? Very bearish on the higher time frame. From an hourly perspective, we are technically in a 1 hour uptrend. Again, lower low, higher high, higher low, higher high, higher low, higher high, higher high, and SMT divergence. So bullish SMT divergence while still in an hourly uptrend. So that's number two. We are still following the medium time frame order flow, which is what we want to capture as day traders. If I don't really care if we're in like a daily downtrend, if the 15-minute and the 1 hour are in line with a bullish bias, as a day trader trying to capture moves and be in and out of the market within 15 to an hour tops, I just need to follow, the medium time frame order flow. So that's going to be the hourly and the 15-minute. So that's number two. Now, for the entry signal, we're going to be using an inversion fair value gap. And this is also where the volume profile is going to come in. So let me actually get the volume profile up, and let me just clear off this stuff on the chart. So the indicator that we use, I'm sure you guys are aware of this, but we're going to go over it again, is session volume profile. So right there, see I have it starred. You can also just type in SVP and it'll come right up. So what I use, there's a lot of different ways to use volume profile, but I personally stick to using the previous day's profile. So this is the current trading day. I'm not too interested personally in the current day's value areas and point of control. I'm focused on the previous days. So if we go right here, this red line is going to be the most important level. This is the previous day's point of control, which is the level that has had the most volume conducted in this trading day. So it's a very key level. And why is this a key level for me? Well, because it had the most volume conducted there in this situation, and I use this all the time, and I always tell people who are new to using volume profile, stick to this one rule, and I promise you it's going to keep you on the right side of the market 9 out of 10 times. If we are trading above the previous day's point of control, stick to a long bias. Now, that doesn't mean I never take shorts, when I'm trading on a 1 minute time frame if we're above the previous day's point of control. But for a general rule of thumb, stick to a long bias as long as we are holding above the previous day's point of control. So that's number 3. We have been trading above the previous day's point of control all day. If we look at this 30-minute time frame, look how well the candles respect the previous day's point of control. We come down with a lot of force, a lot of momentum here, almost get a closure beneath it, but we can't. Then we dip lower. We put in the SMT divergence, but what do we do on that 30-minute? We cannot close below the previous day's point of control. Now we can wick lower, but this is why looking at candle closures is so important. This right here, this 30-minute wick, is our manipulation. This is the manipulation move below the previous day's point of control, and we close back above and move higher. So that's number 3. We are trading above the previous day's point of control. Now, this is where the inversion fair value gap is going to be very important for my entry technique, okay? I was tempted to start trying to long here at the previous day's point of control just because I was really focused on seeing that SMT divergence and having the bullish bias to stay in line with the 1 hour trend. But I can't until I get a proper entry technique. And this is why entry techniques, while they're not everything, it is important to have one that works. So instead of getting long here and just hoping, saying I'm just going to get long at the point of control, instead I wait. And this is what we were talking about on stream. So we waited, we got 2 more bearish 5-minute candles below the point of control. And this is what I was telling to my team on ASFX TV. We can't get long yet until we break back above the point of control. And what we used for our entry technique was this inversion fair value gap. So you see right here, we have this 5-minute bearish gap. We ran through it, got a 5-minute closure above, and that's exactly when we got long, and that's going to show in the recording. So we get long on this 5-minute candle closure. And what do we do from there? Now we have everything checked off, right? Let's just go through it one more time. Number 1, we have our bullish SMT divergence right here. Step 1 for a potential reversal signal. Number 2, we are in an hourly and 15-minute uptrend. Even though it's choppy, even though it's very rangy, we are making higher highs, higher lows, higher highs, higher lows. Number 2, we're in line with trend. Number 3, general rule of thumb. If we are trading above the previous day's point of control, we're sticking to a long bias. That's number 3. Number 4, entry technique, inversion fair value gap. 5-minute candle runs through this bearish gap, invalidating the bearish PD arrays and breaking back above the previous day's point of control. Now, for the final cherry on top, for the last confluence, if we go to the 1 minute, what do we have right here? We have 1 minute equal highs, perfectly stacked 1 minute equal highs. So this was the main draw on liquidity for me. Now, as you can see, and you'll see in the recording, I don't hold out for that target, even though it ended up being met shortly after. But right here, I closed at 11:52 a.m. We had 8 minutes left on stream. This is the thing. I gave a really solid entry signal. Most of the team took this and held this trade with me. I said, guys, let's just close here. Let's close at the top. We might want to chop and consolidate. Maybe we pull back a little bit. We got 8 minutes left on the stream. Let's just get out of here, take our money. This was about, almost 4R, a 4R trade. So I had a 150 tick stop loss, and we got out here around 622 for almost 600 ticks. I'll take 600 ticks any day of the week and shut it down. So even though we didn't hold for the main draw on liquidity, it's good enough for me, right? I got great risk reward on this trade. And it was just a beautiful setup with just really prime delivery. I mean, we didn't have a moment where we had to second guess our idea as soon as we broke above that point of control. Just really, really clean move. So what we're going to do now, I'm going to get into the recording and just kind of go over it one more time, explain the thought process, and you're going to see me take it live. I think it's important that you guys know that we take this stuff live. We take these trades live on ASFX TV. And listen, we take losses, but we also take wins. And most importantly, even though I would not call it a signal service, we want to teach our members, all right? It's not just about following our trades, even though you can. Like, you're in there, you can take our trades. We're doing it live. But the most important thing is that we're explaining to you how and why we're doing this. That's really the value in ASFX TV. So let's get into the recording. And remember, guys, you can use my code ZARB, Z-A-R-B, for 50% off on ASFX TV if you want to check it out. Give it a shot. I'm streaming Tuesdays, Wednesdays, and Thursdays at 11 a.m. But Monday through Friday, we have Austin Silver, we have James Bruce, we have Evan Dyer. We got a really solid team. These guys are like my brothers. They've taught me, I've learned so much from them, and they learned from me too. We all have a little bit of a different style, but we all complement each other really well. And it's just a beautiful thing to be a part of. So check that out if you want, but let's get into the recording now.